Welcome, guys. Happy Wednesday, Crypto FUD. Let's jump right into it. All right, well, today's the day. Today's the day. Another Fed meeting amongst us. Today, we will see exactly what's going on. Could this bring the smallest interest rate hike that we've seen in the last, 12 to 14 months? Possibly. Like I stated in my video yesterday, could we see possibly a curveball thrown into the mix of maybe doing another zero point 0.5, half a point increase? Could possibly happen. We have to make sure that we are basically prepared for, whatever's thrown at us. But if you guys are in this game for the long run, all this stuff right now, all it just means is if we do a 50 basis point and the market, reacts negatively, that just means that it just gives you more of an opportunity to possibly add to your bag or get into some good positions. So never fear. Crypto's here to stay, and we're not worried about it. I wanted to look at Bitcoin right now up into the meeting. As of right now, it's still early. Eastern Standard Time, it's 7:30 a.m. I don't know exactly what time the meeting comes out, but usually it's during midday, like anywhere between I believe 11 or 2 p.m., somewhere around there. Most likely later, like around 1 or 2 p.m., I believe it's when it'll come out. So Bitcoin currently sitting around 23,100, honestly, is great. We'd rather be sitting obviously at over 23,000 than sitting somewhere like we were just yesterday or the day before, somewhere in the 22,000 mid range, 22,600, 22,700 range. In order, and I say this because if we do, like I keep saying, if we do, get some unexpected news, we definitely want to be up as much as possible because there's going to be some turmoil following that news. So the higher we are now and higher we are prior to the meeting coming up will be perfect for both cases, obviously. The 0.25 is already baked in. The meetings, if you're currently, if you're watching the charts as the meeting's going on and they're talking, you'll see they're just going to be swinging up and down, because it's like one word can lead to this and another word can lead to that. So, but I'm pretty sure a lot of us aren't swing traders. A lot of us aren't day trading, for the most part. So, I don't think that any of that should matter to any of us. The MACD is, remember, I don't know, make sure you guys, watch my video for yesterday because it kind of will set you up for what we're talking about right now. Yesterday the MACD was sitting somewhere, if you can see at the bottom of the screen, somewhere around here. It already had done a curve and it was starting to point up. Both lines flipped towards the upside. And I was saying it looks like we're possibly going to be moving up. I don't think it's going to be anything crazy, but, the MACD is pointing that we're going to be moving up. And sure enough, we definitely did. At the time of the video while I was talking, it was like 22,600. And, during the day, we did reach again 23.1, 23.2, around 23.2. So looking at the MACD now, we're approaching that meeting coming out today, and the MACD is actually flipped again, but pointing towards the downside. So if I was to look, this could be a real short flip, and it could, go swing right back up. These are lagging indicators. But if I was to guess, if we're looking at it, I would say most likely, even though it does look like it wants to flip to the upside again, if you can see, I honestly think that we're probably going to be stagnant. Stagnant. I know I always say that, but we're probably going to be somewhere around 22.9, 22.8, anywhere from 23.2. We're going to be around that little channel that we've been staying in. It's like our buffer zone, which is fine up until that meeting. And as soon as that meeting starts, that's when you're going to see some crazy swings, upwards, downwards, who knows. So just preparing you guys. At the end of the day, like I said before, if you guys if you guys haven't been, if you're not in a position and you're waiting to get in a position, don't feel like like FOMO and you missed out or anything like that, because you're always going to get an opportunity to get back into something. maybe won't be at that awesome number at the bottom, that we saw, if that was the bottom, but you might get some better numbers than you're seeing right now. So just stay patient. Patience is always the best thing for crypto. Will tell you. I wanted to bring up this chart on Glassnode. It's the realized price and Mayer multiple crossover indicator. I know that's a big jumble of words, but basically, I'm learning with you guys, but just to, explain exactly what it is. So it says historically, an intersection between the realized price, zero point 0.7, and the 200-day, or basically the 200-day moving average, zero point 0.6, pricing models occurs during deepest phases of bear markets. This is the result of on-chain volume weighted realized price stabilizing due to investors' accumulation, with the unweighted 200-day moving average continues to decline due to the micro price downtrend. Sorry, I was looking at the chart as I was reading. So pretty much, to bring it down into layman's terms, if you can see this chart right here, right? They're looking at the 200-day moving average, basically. And every time we do a crossover, almost like the MACD, but this is going to be, this is a long, these you're looking at 2013 all the way to 2023, the beginning of 2023. And if you can see, every time this line, this blue line crosses over the green, and the blue's down and the green's up, usually it indicates some kind of a end of a bear market. And if you can see, every time the green crosses over the blue, and the blue's at the top and the green's at the bottom, it indicates the start of a bear market. So you can see these crossovers throughout the years, right? Throughout the years, 2016, there was a big crossover, and you could see that big rally up to, I think that was when it hit around $14,000 somewhere in January 2018, right? And if you can see, it almost wanted to cross, but it didn't cross over, and you can see they did have a drop somewhere in the 2018, and if we all know, 2018 did end up going into a bear market. If you're not familiar, it did. But you could see that it crossed over finally over in 2019, where they hit a really big dip. So continuing to follow the market, if you see, it was a dip that was short-lived because it was around 6 months, in 2020 hit. And that's about when I jumped in, around that time, somewhere around there. You see the flip of the green over the blue, which normally indicates a downward movement. And you can see, so right here was a little tricky spot. You could see the blue kind of went straight flatlined, right? And the green was the one that was moving around like crazy. And you have the green as the, let's see here, the green is the SMA. So the green's the SMA, and the blue is going to be your, let me see here. So I'm trying to, is the realized price. All right. So if you see, the SMA was kind of flatlined, right? And we're going to fast forward up until about 21, when the latest bear market occurred. And you can see it flipped back in 2019, but it was kind of stagnant. And that's pretty much where the market was. The market was sitting at around, let's see here, sitting around 14,000. We did see that COVID drop when it was around 14,000, and it dropped all the way down to $3,000 when COVID hit, right? World was ending. To be, that was to be expected, right? But if you can see, it never really flipped necessarily. It got close to flipping, right? But it stayed to where it didn't go into technically a bear market, it looks like. Or am I wrong here? It looks like, so let's see here. The green line stayed atop above the blue line. But basically what I'm getting to is, we saw that green line. Yeah, okay. We saw that green line on top and the blue on the bottom, right? Technically, we were in a bull market here. So it looks like it crossed over right here back in January, where we're in right now. At the beginning of January, it crossed over, indicating that every time that green crosses over into the blue, it usually indicates that we're coming up to some kind of a valley and going into a bull market, is what it's indicating. Obviously, these are lagging indicators, and they're, if you look at historically, they've always been correct, but you're looking at something, from the past tense. So looking at right now, this closest cross that we have right now, it's stating that we've been in a bear market, obviously, and that this crossover indicates that we're about to be getting into some kind of a rally, is what it's stating. Is that what we've been saying? Technically, but you know, anything can happen. I think right now the difference between all this, besides maybe this COVID crap right here, all this stuff, there wasn't the world wasn't in the position that it's in right now. Right now the economies across the whole world are struggling, especially the United States, and that I just feel like I technically want to say we're going to be getting into some kind of a bull market coming up, but at the same time, there could be a curveball thrown out. There could be something, a black swan event, because it feels like the last few years it's just like, that's what the normal thing is to happen, is like some kind of a black swan event will occur and the markets will react negatively. So we'll have to see. I'm sorry I wasn't too educated on this chart, but I saw it and I wanted to just pull it up. I'm learning as far as this stuff. I'm more of a chart guy. So looking at all these indicators, these lagging indicators, still learning. But I guess to take from this is that if you see every time there was purple printed and there was a crossover, it ended up being some kind of a rally followed behind it. So we'll take it there. We'll see how it goes. Today, it's going to be a big day as far as, just a local big day as far as, the FOMC meeting, the Fed meeting coming out. Hopefully, we're only going to see a quarter basis point increase and maybe some talk of some kind of a pause coming up soon in the near future. I technically think we're going to see today a quarter, 6 weeks another quarter. Tough talk in between all these two meetings because they don't want to rally. And then I think we're going to see some kind of a pause coming up. And that will kind of coincide with what I said just a month ago when I think that, towards the second half of this year, getting into the second half, we're going to start seeing upward movement. So, I choose my words wisely. I don't want to say a bull market because, we have to see certain things and it has to be consistent for a while for us to really say that we're in a bull market. So that's pretty much it. I'm going to leave it there. We'll come out this evening and we'll kind of go over everything that's going on. Hopefully we have some good movement today after these meetings, and we'll kind of go off of what we might see next as far as where we're at and which direction we're moving. So thank you guys so much. I appreciate everything. I hope you guys have a wonderful Wednesday. I will see you guys in a few hours. See ya.